Hello, my name is Ivan, aka Armenia. I'm a professional trader with more than 10 years of experience. I'm a main trader in VTF training when we share our trades in crypto, stock, and Forex market. If you want to join our great community, you can find the link below in the description or on our main YouTube page. So today we're gonna talk about last video of our free course. This is gonna be my exact strategy. You have to understand how it works and follow it step by step. So let's start. So first of all, before you start watching this video, I highly recommend you to watch previous videos, because without full understanding every definition and every specific words that they're gonna say, so my strategy, I have actually a few strategies that I use for different markets and for different market conditions. My main strategy right now is I'm taking position after we have break of market structure. So let me draw it. So this is the price going down, and we have bounce, we have going down, and then we're gonna pumping, then testing, and keep going higher. You will see this scheme on every chart. So this everything, all of this will be happening in point of interest. This is gonna be dark, and we put it on the right side, right? So this is our point of interest. First touch will be usually on some important liquidity levels. So let's say this is gonna be previous daily low, or this previous daily low can be lower. This is not the point. So this is previous daily low, right? Or it can be here. Usually this is happening like this. So if you see this kind of picture, it's already signal for you that you have to look for setup here. After this, I'm waiting. It's very important. I'm waiting when we have break of market structure. Right here. This is our break of market structure. So as soon as we had this break of market structure, I always watch for a test. Also, it's very important if we have this break of market structure with imbalance. So this, let's say this movement should be with imbalance, right? So this should be FFG. It's very important that you have FFG right here when we're breaking the structure. It's gonna be our confirmation, or maybe even lower. Yeah, it should be a bit lower, like this. Let me explain why it's so important. Because when we're gonna go back on retest, we're gonna feel this imbalance. It can be on 5-minute chart, it can be on 15-minute chart, it can be on 30-minute chart, a 3-minute chart, 1-minute chart, but it should be imbalance there. Also, we can have order block, probably somewhere here. Here we probably have order block, but it's not necessary. It's not necessary. Let me mark it. So we have this order block. So as you can see, this is happening inside of our point of interest. We have break of market structure with fair value gap formation and order block. It can happen in our point of interest with breaker block, etc, etc. So all this kind of stuff and all this criteria should be there. if you don't have something like this, for example, you don't have order block, it's fine. You don't have fair value gap, it's questionable. Like when I see position like, and we have only um, the break of market structure, I will show you on examples like why it's so important. It means probably we won't get high enough, and I will be risking only 0.25% or like even less per trade. Like when I see construction like this with fair value gap, with order block, or like everything will be in POI. Also we have like liquidity levels such as like previous daily low, etc., previous weekly low or previous weekly high. It doesn't matter, right? So we have these key levels. As soon as we see this like key levels like this, key liquidity levels, this is going to be like sign for me where I will be looking for my position. Let's see like some like real examples. So remember the structure, like remember. So let's do this. So first of all, it should be like POI. Then after POI, it should be liquidity level. Then it should be break of market structure. But liquidity level we also can have. We also should have like liquidity grab. Liquidity grab. Or double bottom, or like double highs. So market structure with imbalance with FFG plus order block if possible, fifths test of this FFG or FFG plus LB. So let me fix this. So as you can see, we have test of this fair value gap, also have test of this order block or criteria matched, and my entry will be and everything should be, let's add something, and in discount for long position, and premium for short position, for short positions. So remember this like 5 criteria that you have to see on the chart. If you don't see them, just skip this trade. If you just follow this like simple like 5 steps, it will have like you will have like 90%, 95% win rate. So right here you can just open long position like in, because like start building your position in in discount market, and put your stop under this order block, because if we fail this low, probably price will go like keep going lower, and your take will be on like next key liquidity. So for example, here we had some high, right? right? Something like this. So my take will be on this high, or we have like this, or like some kind of order block here, or like fair value gap, like let's say like right here on this level. I have like fair value gap right there, right here. Something like some, it goes like first trouble area. So area where price will get some reaction. If you just like follow the steps, and we'll be doing we will be following the strategy, it's enough for you just to open like 5 trades a month, like 8 trades a month, and it would be enough to make like like 10% by risking like 1%. If you're risking like 0.5%, you could just count for yourself. But you will usually be doing like at least like 1 to 2 risk reward all the time. This is like when we're talking about like this specific like break marks. Yeah, it's look nice, but it's just a theory. Okay, let's go and watch it on the real chart. Just today, like we took like some trades. By the way, like it will be like 2 examples right here. It will be example about like break of market structure and retest, and also like second when I take in trades based on setup on like high time frames. So here, as you can see, we have this like lower high. Better to see it on like 1 minute chart if I'm not mistaken. Let me see. Yeah, right here we have market shift. This one. This is gonna be like our. Also, as you can see, we got liquidity grab. It wasn't previous daily low or previous weekly low, previous like monthly low, etc. But we had liquidity from previous session. On the Forex market, this is what usually happens. We build in liquidity on previous session, and then we grabbing them on like next session London or New York session, and going on the opposite direction. This is what happened here. We have break of market structure. We tested. As you can see, we didn't test exactly 0.5% right here, but if we prolong it to this higher high, this happened in like discount market. We had like reversal in discount market, and I was building position right here. This was like I opened my position. I also sent alert about it on the like in our Discord right here, as you can see. Had this break of market structure, and we tested. That's all. And my target was previous daily high, which is this level. So I took my position. I took my long position. I put my stop under this 5-minute order block, just right here, to like 5 pips. And my take was this previous daily high. 2.5 risk reward ratio and 13 pips. Is it simple? It sounds yes, but it takes time just like to build experience and to see the specific like structure, the specific setup. And this setup will repeat like over and over again. Previous day. This was a bit tricky because we had like 2 liquidity grabs right here on like a London session and New York session. So yes, this was a bit tricky because we had like two manipulation on like on London session. We took liquidity from previous session, and then we took liquidity from like London session. And as you can see, we had break of market structure, but without imbalance. We had like imbalance here, but it wasn't a break of market structure with imbalance, which happened right here. As you can see, we have like this little imbalance here, and it also has this huge imbalance. That's why here it wasn't a good position, and as you can notice, we didn't go too far. But on the second go, we had break of market structure. We tested like we fulfilled imbalance, and also this happened in a discount market, and we went up higher. Now, this is a forex. What about like indexes? Indexes will be exactly the same, but on indexes it's sometimes we have like ranges like Vikings, etc., so all this kind of stuff, but you can still find this setup, specifically this one. So as you can see, it was previous day high, which is like very important. You have to like identify all like previous days like highs and lows, and we took this. We had like break of market structure right here. You see like we broke it with like imbalance, which is like right here and right here. This is like, you can just mark it like this. We feel it. It's probably like on 1 minute. Let's go to like 1 minute. As all of this like happened in premium market, and you could just open position right here with stop above this high. So let's check out your opening position in premium market. Your stop will be 19 pips on $19 with per contract, but again it depends on your broker. And your take would have been first one, this is like 40 pips, or 40 pips, or like next one. But you could have closed it right here. It would be in great position. Same stuff over and over again. So you have to see like all the setups should be in your point of interest on the key like levels. It can be previous daily low, previous weekly low, previous weekly high. So you can check liquidity lecture about it. It has to be break of market structure on at least like 5 minutes. Let me edit. So on at least 15 minutes. On the 15 minutes, it's gonna be like a best like setup, and more with higher rate, like lower time frame, lower chance to win. At least like 3-5 minutes. Test on this FFG like order block in discount for longs, premium for shorts position, and take it's gonna be 1 2 2 2 3 error, or till first trouble area. So point of interest, liquidity grabs like daily, weekly, monthly, all this kind of stuff. Then break of market structure with fair value gap and possibly order block on at least like 50 minutes. Also can happen like in 1 minute, it's possible, but better to use like high time frames, at least like 5 minutes at least. Test of this like fair value gap that will be happening in premium or discount market, and then your take will be till first trouble area, like for first like liquidity, which is like previous like lower high or higher low. Then it's gonna be like fair value gap or like order block. Just want to show you on 1 hour. Yeah, let me see. Yeah, this one. Like opening position right here because it was break of market structure, and my take was 50% of this order block. That's all. I didn't hold longer. I didn't keep this position for a long time, but as you can see, we went down after it. That's it. So this is like first strategy that I use. It's like has insane high win rate. Now let's talk about like second strategy. I want to show you it on Apple. For this strategy, I'm using like high time frames, so daily, weekly, like 4 hours. So maybe like 1 hour sometimes. So what I'm waiting. I mark my zone, so it's like fair value gaps, like any inefficiency. Then key levels, previous monthly high, previous weekly high, previous like daily high, right? Then what I waiting for? I waiting to like price to come into my zone. So price came to my zone right here to this like daily gap, and I've been building position right here. My stop will be above this imbalance because all of this will be happening in premium market, so I will be looking for long position. Also, I had this break of market structure on high time frames on the daily, right? So this is like swing, and this I have like a break of market structure. I had like break of market structure with imbalance. Again, same strategy, but sometimes on the high time frames you don't wait for confirmation. You don't wait for break of market structure, etc. Sometimes you can just like open it aggressively on the key liquidity level. So we had break of market structure with imbalance again. So another strategy that I'm using. For example, this take was on PG, if I'm not mistaken. So on PG. On PG, as you can see, we didn't have break of market structure like on like 1 hour, etc. No, we didn't have it because break of market structure will be only here, right? This is gonna be like our break of market structure, and also win the range, so it doesn't matter. I'm waiting for price to take liquidity from key levels. So as you can see, we took liquidity from all these highs, right? And as soon as like we took this liquidity, I'm going to on like 1 minute chart, on 5 minute chart, and wait for at least like market shift. Market shift basically when we go in up, taking like liquidity from previous levels, right? We took liquidity, and we're consolidating, going up, 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 and going down. Because price can go down or up like rapidly, especially when we have like cascade. Like this is what happened today on the euro. I took like setup. It was like 1 hour, 1 hour fair value gap, and as you can see, we tested like 50%, like about like 65% of this fair value gap, and I took my position right here. I couldn't wait for confirmation, because if we go on 1 minute, we've been building liquidity, right? We've been building liquidity, and as you can see, we build liquidity. And for open back position, I should have like wait this break of market structure and then test in the premium market and then going down. But you can notice that this didn't happen. So when I see this is kind of like price action that's happening in my point of interest, like let's right. So first of all, I have like key, have point of interest. It can be like from high time frames. It can be FMG, it can be order block, mitigation block, it can be breaker block, right. Also it can be liquidity levels, then liquidity from previous sessions. Is this necessary? And yes and no. So it can be or cannot be, but the most important is it happening in the POI. Liquidity build. Liquidity build. That doesn't have anything to stop the price when it goes to opposite direction. Liquidity build that doesn't have anything to stop the price when it goes to opposite direction. That's all. This is like what you have to see here. It's happening in 1 hour fair value gap, especially like 50% of it. This is where I've been opening like my position right here, right here. This is like 50% of this fair value gap. Then like we take liquidity from previous session, from London session? Yes, it's been taken. Did we have liquidity builds that doesn't have anything to stop the price? As you can see, we don't have like any zones that can stop the price. If you go like to like higher time frames, we have this fair value gap. Like it gave some reaction, but all of it happening in premium market, which is extremely bearish, because like we don't care about it, because this zone won't work. This is like what most people don't understand. They see order block and they think it will play some role. No, price doesn't give a fuck about it. Okay, so price just doesn't care. about like these fair value gaps, and they will be like slaughtered. That's all. Like order blocks and breaker blocks will always work if they in the right place. If they like in like premium and price going like lower, when we have like market shift, it doesn't matter. It won't play. It it's not important. That's all. As you can see, we had this order block. Did it give any reaction? No. It just was completely ignored. Same like on like 15 minutes. We had this fair value gap. It just bounced a bit and went down. That's it. So first strategy, this is like this that I use 90% of the time. So I like everything happening in point of interest, like liquidity levels, liquidity grab, or like double bottom, double highs. Also, you can see like 3 drive pattern, 3 top setup. Then break of market structure with fair value gap. It's very important. Plus order block on at least like 3-15 minutes. Test of this fair value gap and fair value and order block and discount for longs and premium for shorts position. And 1 to 3 risk reward or like till first trouble area. This is strategy. That's it. Simple, and you can see it like everywhere. Like you can see this like here on euro. You can go like on Apple and go like this to see this on a daily time frame. We have this break of market structure. We have this like imbalance. We tested this imbalance and we went down. That's it. This is your position. You can also like trade based on like setups. Like we took position here on euro, right? When we took like this position in euro from like this imbalance, because it was key level. It happened in the premium market, but as you can see, it's also we have like this break of market structure. We still have it. So this is just some adding to like main strategy. It's just some extra cells to this one. Also, you can check video about like ranges. In this videos, like in this video about like range, I've been talking how to trade range and how to identify it. Because, for example, on a dough, we had range. Here, it's like Wyckoff. We didn't go forward, was distribution. And then we went like down. But final target will be this level. I hope you enjoyed this video, and don't forget to hit subscribe button, set notifications on. Please share this video and like all like 8 videos that I recorded. I spent a lot of time to do so. If you have any questions, you can feel free to join like our like Discord community. You can find link below the description. We also have like some social media such as like Twitter, TikTok, YouTube. Thanks for watching. Bye.